Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Hello trading cats, I'm the Forex Super Model risk manager. Now, this video is about should you trade Bitcoin like Forex? Well, if you're new to the channel, where have you been? But welcome anyway. Right, this is the sort of the chart of Bitcoin, and obviously when we're talking about Bitcoin, you can talk about altcoins, alternative coins, anything that's not Bitcoin that's a crypto. Right, now, should you trade Bitcoin like Forex? Should you trade Bitcoin at all? And how do you trade your Forex? So there's lots of questions in there. Now, if you look at the chart, you can see that the inception of Bitcoin, roughly around 2008, the start of the financial crisis, flatlined. Then you had a kick up the pants in roughly 2017, late 2017, and then you had this like fall. And then it dirged along at around just below I don't know, $1,200, and then we had this ramp up in 2020 and onwards with some sort of fairly scary ups and downs. So the thing to take away from this chart is that it either does very little or it does a lot. Now, when you're trading any financial instrument and you get this sort of scenario, and bear in mind this is the whole life history of Bitcoin. This isn't like you know, a monthly chart or a weekly chart or anything, or daily. It's the life history. So and obviously it's not flatlining. These are going up and down and stopping out all your Mickey Mouse day traders all the time. But nevertheless, if you look at that chart as a whole, that's the sort of picture. Why do you get that picture? Well, it's because of the nature of the market makeup of Bitcoin. And if you look into it, you can see that roughly 2% of market participants control roughly 95% of the supply of Bitcoin. So if you reverse that out, you can say 98% of market participants in Bitcoin control 5%. So pretty much the bulk of market participants, if you could say it, control very little of the market. So it's very diluted for some and very concentrated for these 2%ers. Now, these 2%ers in the media, known as the whales, they're buying and selling, and you know, in vast chunks, and creating these like swings, these massive swings in the chart. And all the rest of the shower, the day traders and all the smaller participants are basically jumping onto the coattails of these so-called whales, this 2%. Now, is that a sensible market to be trading in, and is it a sensible market to be using Forex principles? Now, we'll stop it there and just move on to what are the Forex principles you can possibly use. So don't go away. Right, welcome back trading cats. Right then, so should you trade Bitcoin like Forex? How do people trade Forex? They trade Forex technically, they trade it fundamentally, and they trade it using sentiment, expectations and tone. Right, so let's look at the fundamentals of Bitcoin. You need to understand that up to about 2040, the year 2040, there will be cuts in creation of Bitcoin. It gets cut in half every 4 years. So they, as they mine it, to use the jargon, it cuts in half every 4 years. Now this means that ultimately, if you do all the jiggery pokery maths, you end up with a maximum amount of Bitcoin in circulation, if you want to call it that, of 21 million. So your supply curve looks like that for Bitcoin in 2040. It looks like 21 million. 21 million. Now, if you've got, so this is the price and this is the quantity. If you look at perfectly inelastic, to use the economic jargon, it's not responsive. So perfectly inelastic, so it's not responsive to price changes. The supply, once you get to 2040, then the quantity is fixed. So the price, if you get, you get your demand changes. Supposing you get an expansionary shift in demand from D to D1, you're going to get a massive pump up in price, and vice versa, obviously. But so that's one thing to understand. The fundamentals of Bitcoin are set almost. They're set in the sense that it's been engineered to have a maximum size or scale in terms of number of Bitcoins by 2040 of roughly 21 million Bitcoins, or to be more nerdy, bit tokens. Right, so that is something you need to be aware of. What year are we now? 2021. So we've got 19 years to go. Right, so that's the supply end of it. Quite often analysts want to use normal technical analysis, and so you're looking at support resistance, patterns, head and shoulders, teacups, you name it, moving averages, the whole shebang. But remember, Bitcoin basically looks like this. That's the graph. How useful, how suitable is technical analysis for that? Probably not that suitable. Technical analysis, it's got an on-off gear, hasn't it? It's got an on-off switch. The market is either dirging or it's going like crazy. Right, so technical analysis maybe isn't the best. Fundamentally then, what are the fundamental drivers of Bitcoin? Well, as we said, we've got this supply situation, and what about on the demand side? Well, it's dependent on market perception of its place in the fiat currency world, really, which is what we're going to go on to talk about now. So we'll stop it there, don't go away. Right, welcome back then. So let's look at the potential demand side and the SWOT analysis: strengths, weaknesses, opportunity, threats to trading Bitcoin. Right, some key dates then. So basically, if you think about Bitcoin, its original design characteristic was it was independent. It was an independent system away from government control or other outside influences. Now that is its strength, and is also its weakness, because if you look at Turkey recently, Turkey basically has banned the transaction of Bitcoin in goods and services. This has completely stuffed a couple of exchanges, and it's put sort of a negative ripple through the crypto world. So, and why did Turkey do that? Well, there's many reasons, but a lot of it is political and control. So you're up against that type of geopolitical situation. So when you're trading Bitcoin, you're basically trading all these sort of governments and control freaks around the world, and you need to decide where you stand within that spectrum. The other thing is the Western worlds and China, for example, are trying to generate their own government-backed cryptos. Now that actually goes against the whole concept of cryptocurrencies. So you're getting a sort of a Diet Coke version of crypto, which is like backed and by the government. But the whole point about it is that takes away the whole principle of cryptos, which is they are touchless, if you like. You can't, if you have the the code or the key to your wallet, your financial wallet in crypto, then you alone have control. But as soon as you pass it over to these grubby governments, then they become a second, third party to the whole system, and that isn't what crypto is about. You're basically just joining the party to be abused like in the fiat world. So and we're not talking the cars here, right? So that's that. So you need to understand that's a key issue. So 2040 is a key date for Bitcoin, because that's the time when in theory you reach the max 21 million Bitcoins. So you've got inelastic supply, and then away you go. What's another key date? 2013. Now, why do we worry about that? Well, that was Cyprus, if I could spell it. Now, Cyprus did what's known as a bail-in, and that's when you went along to your bank, you had your 100 quid or whatever, euros or whatever they use in Cyprus, and suddenly you weren't allowed to withdraw them, and they did what's known as a bail-in. They converted part of your deposits into bank shares, whether you liked it or not. Now that is a major big cross in the box. It's a major geopolitical risk, because if you've got your funds in a so-called safe bank, and then suddenly the bank turns around and says, well, actually we're going to nick 20% of it, and but don't worry, we're going to give you shares. Well, that's great, isn't it? That's not what you want. So that feeds into this crypto sort of independence situation now. So you can see that the central governments aren't averse to shafting you either when you've got crypto, when you haven't got crypto. So we're entering this sort of like this grey twilight phase of crypto. Is it going to be universally accepted? If it's universally accepted, it's not really crypto, because it's probably been bastardized into some government fiat money system where they've got the control. So think about that. The next thing then, right, so we've got that. We're looking basically at this situation. Let's just grab the old crib notes now. So we've got 2040 as a key date for maximum supply. We've got the Cyprus bail-in. We've got the 2008 financial crisis, which we talked about. And we've got this idea that 2% of market participants in Bitcoin basically dominate and control the whole market. So it's likely that you're not one of this 2%, or you wouldn't be watching this video. So if you're like the rest of us and you don't have this like sort of monopoly situation over financial markets, then you're in with the other 98% and the 5% controlling 5% of 98% people in the market. So this whole sort of principle, this is where you are when you're trading Bitcoin. Now, given what we said about the 2040 supply situation, then under normal circumstances, logically you would say the only way to trade some sort of financial asset which has that sort of scenario would be to have a long bias. Now, I would say that is true. You need to have a long bias in regardless. Don't go ever, it's probably not sensible to ever go short Bitcoin. So if you're not going to go short and you're just going to go long, when do you want to go long? Well, clearly you're looking for the next you're looking for the next bath off, aren't you? You're looking for when everybody's taking a cold bath, and bear in mind that this graph here, which is up to 2020, 2021, this section here, when we get up to 2040, if we live that long, then that section there is probably gonna just look like that, and then you're gonna, this could be 2030. I mean, I'm just guessing, but But this is $6,000. I mean, that's like peanuts compared to what some analysts are saying. Some analysts are saying that Bitcoin's, given the nature of the inelastic supply and all the rest of it, could go up to, well, sky's the limit. It could go up to $1 million each per Bitcoin. You know, and what's the smallest denomination of a Bitcoin? It's 1 over 100 million. So there's plenty of scope for getting your little share of those 21 million Bitcoins. It's the reciprocal of 100 million. It is the smallest smallest fraction of a Bitcoin, if you like. So that's something to bear in mind. This section here will be looking like this section here probably. So my advice as the risk manager of the Forex Super Model would be never short Bitcoin, never short cryptos. But if you're going to have a long bias, wait until everybody's completely been mashed and hacked off. If you could get in, say, you know, at the moment we're punching sort of around the $6,000 mark. If you could get in after it's had a right pasting, and you're in at such a scale that you can wear this drop down to, I don't know, down to 1200 again, then you're pretty bulletproof. All you got to do is sit back. But is that trading? It's more like long-term investing. So this is where you've got the dilemma with Bitcoin. If we're going to trade it, we will have a long bias. We will be capable of going down to under $1,000 a pop from our price. So we could lose, say, if we bought now, we'd be capable of losing $5,000 on the trade per trade, if you like, depending on how you're going to do it, or per Bitcoin. And in the belief that given this supply situation, that the only way is up. But the only way is up is going to be a very tortuous road, and it's going to be a long road, and it's going to be fraught with all these other dangers, like the central banks getting their grubby mitts on cryptos and sort of bastardizing it into their fiat world, which is really not what crypto is about. So on balance, we would suggest you don't fill your boots on cryptos, because the jury is out as to how it's going to. If China get their way, they're going to convert the entire population to their own version of crypto, and then they'll have control. And they've even talked about having a time delay, a time decay on their crypto. Can you imagine that? So it's like saying you've got your 100 quid in your bank, and the bank says, well, after 2 years, it's actually not going to be worth anything. It's got a time decay on it. So you need to spend it, and that's another control mechanism. They're forcing the general population to not save and to spend and consume on whatever they choose. So there's some massive questions and some massive moody issues to overcome in the crypto world and in the financial world in general. So our advice is you have a long bias. You are prepared to go down to the doom and gloom depths if you get in just at the wrong time, and you just sit with it. And it's not really trading, it's investing with an eye to the future. But you've got to bear in mind you've got this systemic risk of the governments and the powers that be sticking it to you at some stage. So our advice is keep it relatively low key, and day trading it makes very little sense at all unless you really are capable of jumping on that rush, which happens realistically about every 10 years at the moment. So good luck with that. Anyway, hope that was useful. Try and catch our other videos. See you again soon. Goodbye from the Risk Manager.